Okay, guys, I'm going to focus in on the Devil's Edge and the Gann high-low indicator and how you might consider pairing those. Before I do, just a reminder here, we've got this little flash sale coming up on Friday, and this is a one-day event, 40% off all of our indicators, the entire catalog, with the exception, if you note here, the exception of Algo Studio Pro and those products that are previously bundled, right? They've already been discounted. But everything else will be 40% off. There again, it's a one day only, and you need to be a member of our Discord. So if you're not a member of our Discord and you go to try and apply this discount code, it's not going to work because it's tied to whether or not you have a membership in our Discord. Discord, by the way, totally free. So if you wanted to take advantage of this and you're not in our Discord, right, the access links are right on the website. Very easy to get to, and you could drop in and you'll see this under announcements here, and well, might be something that would save you a little bit of dough, right? Which is always a good thing. So with that, let's get on to the video. All right, hey guys, Sam, I'm back with another in this series, kind of focusing on maybe some underappreciated, underloved indicators here that can be really quite effective. So this will be much shorter than the last one. I certainly got your feedback about being a bit long on the last one, but this is pretty straightforward here. Now on the chart here, I have my preferred instrument is a 2000 tick on the ES. Now ES, MES, right? Just a function of count size you're trading and what the volatility looks like, right? So I keep both open, throughout the course of the day, depending on what the price action looks like. Now today, I'm just recording this here. Oh, Jesus, what is it? Tuesday afternoon, just after the market's closed. A little variation from some of the things I put up before, right? So I've got no volume profile on here, but I have kind of a proxy for it, and that is our VWAP indicator. So I have VWAP in the middle here, the blue line that you see here. That when we're below, where it'll be this maroon, and then blue, it'll be when we're above, and then attached around that I have one standard deviation, right? The band of, essentially, again, rounding, it's 68.2, but let's just call it 70% of the price action here relative to VWAP is self-contained there. So it's often it'll be very close to the volume area highs and lows. Not always exactly there, but again, it's a bit of a proxy. So if you don't have our toolbar and you're going to draw them in, you don't have a volume profile, or for whatever reason, this can serve as a bit of a kind of again, as I've used the word several times now, a proxy for that volume profile. So here we can look at it here again. Now this is really a good example of a day where an indicator can really keep you out of a lousy trading market. And we've had kind of this overhang on the market. Now we're getting a little bit of a push here end of the day, but for the last week, of course, we had the Fed the news hanging over the market all of last week, and then we get the news, and then the market has to retrace it all, and now we're back to where we were before the retrace. But this was not a great day, and just using the squeeze indicator here. So where you see the yellow dots here on the chart here, we'll get into what that is specifically, and then down below. 80% of the day, we're with the exception of this last little push, we were just in a squeeze. Right? This is very difficult to. It can be very frustrating for traders trying to trade this. Again, I believe me, I banged my head against the wall many days, thinking, okay, well, it's got to break now. It's got to break now. And of course, the other variable in here is looking at the initial balance here. We stay self-contained. Here, I talk about this every video. Here's Madonna, right? Here's the first test of the IB. You didn't get a lot of traction from it. Now, but Madonna, that trade, that's a scalp. That's not really suitable to the MES. You're much better trading that in the full size because your, target would be VWAP. Maybe you had a runner go to the IB low, but that's usually not the case. Ideally, you're going from the IB high to VWAP. That's a very successful Madonna trade. So you see it. Sometimes it's just going to be a scalp. You get a little, liquidity sweep here, and then you get another shot at it. Not to digress into that, but you see how for the most of the day, the market is just, look at all the yellow dots here. It's just not tradable. And so you can really find yourself so far underwater that by the time we actually get some trend and some movement at the end of the day, are you playing catch up here? Is your trading affected by losses you took during this chop? Could be, right? And we've all been there, right? Now you get stuck in the chop here. You're down X amount of dollars here, and then the rest of the day is spent trying to get back to break even. Just a again, someone does this a lot, right? You know, not trading is a trading decision, right? Choose your days wisely. Okay, so let's get down to what I wanted to focus on, which is the devil's edge. Now, this works really well in conjunction with our Gann high-low indicator that you see on the chart. They play together very nicely, and you see there's redundancy here. So I have the squeezes on the chart and then on the center line down below in the devil's edge. Because I prefer to trade with tick charts for my entry template, I always want some representation of volume, so I include our volume zigzag histogram, which you can see it. Here's the histogram here. You can see it tied to these volume swings down here. Now that's not our focus for this indicator, but again, that's a much unloved indicator here. It would be similar to a Weiss wave, except I have more control in the Weiss wave because I can decide the parameters here. So I have this set to a 14-period ATR, 2 times the ATR to create a swing. So you see some pretty good examples here of where this can be useful. Well, right here, you know, we get these no interest markers here where we get you can see the volume just declining here as we get the initial push, then the secondary push, then the third push before we get the sell-off here, which comes back to VWAP. By the way, well, I was trying to leave those out of there. Of course, measured moves, right? We'll get back to that at the end of the video. Okay, to the point at hand. The nice combination between the devil's edge and the Gann high-low. Now, for those of you that are maybe are not familiar with the Gann high-low, it's a moving average, but it's flipping when it crosses whatever the period that you have it set. So I have a 21 period EMA. Well, here let's go into the indicator. So here's the Gann high-low activator. That's technically the name for it, as Gann labeled it. And I have a 21 EMA in the middle here, which you've heard me reference before. Often served a 20 or 21. They're often very good kind of magnets the market likes to retest here. Now I run that on a 21 EMA here. So I have not completed my setup here because I just want you to understand when we cross the line here, you get the color change, and then we flip. So to cross again, we would flip here, which you see. So we flip and then we go underneath, right? So it's a flipping moving average for a lack of a better term. What I like to do with it, and I have it here disabled here, I just use the EMA slope color here to match the colors there. I have that disabled because I just wanted you to see the way the Gann high-low works and how it flips. It's not complicated, but just for clarity. So if I re-enable this and we get this back on the chart, let's give it a second here. Okay, now I want those measured moves off for a second, and I want the DRZs off. We're not focused on those. It just happened to be the template I was using today. So now, if we look here, when we get these flips, you can see the EMA is on the other side. So it's really what I've created here is a little mini SSL channel. So we're flipping, but I'm just using it, the Gann high-low as the trigger to when we flip to the other side. If I just had the EMA on, well, here you would see the cross, but you don't get the dramatic flip. So this can serve as an excellent, kind of a guide to stop placement if you were to get a close well below it here. Likely, the short-term trend has changed or the major trend has changed. So if we look here now, again, just as we start the day, and let me open this up so we can, let's get this so you can really see what you're doing here. Now the line with the dots on it, that's the MACD. Right, that's the MACD line. The Bollinger Bands that are around it are also set to a 21 EMA. So again, let me go to the indicator. Here's the devil's edge, just standard common MACD settings, 1226.9. The standard deviation here is 1, right? This is now some variation here. You could do 162. I've done 162. A member who was encouraging me to make this video, he likes it at a 1, so I thought we'd do it this way. The 1 can be very effective because you really see when the strength takes you outside of the Bollinger Bands here. So 1 standard deviation, again, 60, we can call it 70%. We want to round up a little bit. 70% of the volatility relative to the MACD is going to be tied to those Bollinger Bands. Then we have the squeeze, which you see here again. The center line is a 21 EMA, and the squeeze lengths, those are 20, right? For the Bollinger getting inside the Keltner channel here, just showing you that lack of volatility. So there's nothing particularly crazy about it. It's a relatively straightforward indicator. It's just pretty unique that we have the squeeze built into it, and then the center line. Oh, this is on the page. If you wanted a little more detail on it, that's the vortex indicator, which is a trend indicator, and it tends to be very close to when you see things flip, right? So you see us, for example, we flip red here as we come out of this squeeze. The vortex has gone red. It's just one more indicator. If you're not familiar with the vortex indicator, it's a native Ninja indicator. You could just Google it or go to the Ninja site here if you want to read about it. Find the formula. It's a trend indicator. Very simple, but we built it into the center line. So just for one more bit of confirmation, am I on the right side of the market? So as we look here, this is kind of an important point that I would stress with you. Let me get a line here. When we start to break out right here and we get this push. You see, my view is this, again, it's based off of a lot of experience here. Here's the push, right? So you can see as we are pushing out. So note below, right? We're pushing outside of one standard deviation of the Bollinger Bands here with the MACD. The center line is green, vortex is green, right? So the trend is up. Then we can look, pretty clearly at the Gann high low with this little SSL channel that I've created here, and you can see all of this is in alignment here. Now, of course, the first thing you'd be looking at here is how is it going to react? Oh, where are we? Come here. How are we going to react with these two pivots right here? Right. So this was clearly a little stop run, and then they drove it down. Right. So how do you know? Well, look at the price action here. So the question would be, okay, how is this potentially now another little stop run here? Well, if we look below here, a couple of things would give you a little bit more conviction here. One, on the first time when we did this, look at the volume fall off here. And then as well, look in the edge. You get an arrow here. Look at the divergence I get right here. So I'm getting a new high. The little magenta triangle here is tied to the ATR, and then we call it a no interest long, because the volume doesn't support the idea I've got new high here. So thus the big drop off. But the devil's edge here is confirming here. I don't get back above the Bollinger Bands here, and I start to roll down. Now it happens during a squeeze. Do you want to trade during the squeeze? You got to make, that's a decision you got to make. Some people will say, who cares, right? But I tend to, if the squeeze is there, the only thing that will give you a clue is what color are the EMAs when we come out of the squeeze, right? Now this would have been in micros, probably a scratch trade. You didn't get enough here. You bounced at VWAP. You're coming back the other direction. So likely that's going to be a scratch. Let me get that out of here. The point I want to try and make here, and this would be just price action in general. Once we start to make this break, now while it certainly you would have had a successful trade today, my suggestion is not to try and chase this. You can look at it and go, well, why not? Look at all the money. Because often, right, the push up is just adding risk here. So where are you going to put your stop down here? You're going to use the eye below. You're chasing a little bit there. You got to be careful about that. The much better trade here, again, my opinion, right? Feel free to disagree, but my opinion here is that I don't want the first push. Rarely do I ever want to chase something like that because you're late, right? Now, if you had bought it down here, and there was a reason to buy it down here, if you had bought it down here because everything here is telling you, whoa. I'm not sure I want to sell that. Again, look at the MACD, right? We're down below, where the center line is red, volume is here. Now I get the same thing on the other side. Now note what happens here. I get a new low here on the push down as we come into VWAP, but the volume doesn't match it. Now I'm coming back the other direction. By the time the center here is often called the river. By the time I cross the river, I'm up here. I've just swept these highs. I don't have a lot of, you don't know this is coming. I don't have a lot of conviction here that I want to chase this. What I'm looking for is the retrace. And this is where the edge can be helpful. It's same thing with the Gann high low, the trend lines that are here, which I wasn't supposed to put those on here, but that's our auto trend line. So here's the swing, here's the retrace. Now, every decision you've ever made in your entire life is based on this, right? Swing, which side's going to break, this side or this side, right? We're going to break this side, we're going to break that side. That's it. That's all the market can ever do. We're in two-dimension. That's it. There is no other trading decision you've ever made. Swing, which side's going to break. That's it. So here's the swing, here's the retrace. This is a gift right at the end of the day. Now, this is kind of late in the day for this. A couple of different ways you could approach this, right? Just a little bit of follow-up from what we looked at last video here. I could draw a volume profile on this. How does that look? Okay, well, if I were going to be drawing the value area here, right, like this, well, we're coming right into value. We don't quite make the point of control of this swing, but I come back into value here, and then look how we tap the 21 Gann high low, but we don't flip it. It goes red just for a sec right here as the EMA goes red, but it doesn't close below, and then there's the push afterwards. That was really the best trade of the day. Well, let me rephrase that. That's the cleanest trade of the day. Maybe you've got some scalp action in here. My guess is you likely, unless you're a very skilled hyper scalper, and you're likely not doing it in the micros, you just didn't have a lot of opportunity, right? So if anything, this indicator and this indicator, look at all the squeeze here through the middle of the day, is keeping you out of the market, which is kind of what it's designed to do. You don't want to trade the slop. You want to wait, right? Do we get the push and then the retrace? Now, okay, all right, this is getting a little bit beyond just focused on. Let me get this off of here. It doesn't delete that quickly. You don't get the, again, careful about the chase here. Yes, it would have worked today, but more often than not, right, this can be problematic. You do get the little, if I had, it's likely you've got a little order block here. As we come back to it here, there's the trade of the day. Now, note what happens in the edge. I'm going to just raise this up so you can see it more clearly. We do not get to the other side of the river. We do not cross the river. We come back. We get a little bit below that 21 EMA that's in the center. Look at this, the lower line here, and then we don't get a big push lower here. If anything, I get no interest here. The shorts are not showing any interest in getting aggressive. And then the last little kick up to finish the day, really, you waited all day. If you're a trader going bell to bell, or you come back, but more commonly would be, okay, if it's slop for the middle of the day, let's come back for the last hour. Well, if you came back for the last hour, well, here's 2, we're getting into 3 o'clock here. That was really the best opportunity in the MES. Now, a little more volatility in the NASDAQ today in the MNQ. But there's the trade, right? It's like right. I can't script it any better. We don't push the other side. We get neutral once we go into the river. You'll note whenever we get into the river, we get the white dots here. So we're kind of neutral here. And then I'm coming back the other way. I get the push out. Now, you don't necessarily need to wait for this to push out. You don't get a perfect measured move here. But you've got enough here to say, okay, yeah, I can take that. And then look here where we have a little, if I had it on here, where we get a little fair value gap here. Then we're getting the size of the bars pretty well representative of the fact that this is going to be one of those end of day. It's not a monster ramp, but you're getting that push into the close, right? A good one. So the combination here is effective. Now, how am I doing on time? 16. Let's go back a day and just look here, because this hasn't been a great week, but stand by for a sec. This is Monday. Monday looked a lot like the prior week's Monday. Just very just you're good. You're not going to. Very rarely you're going to have a particularly good day when the price action, when this is all it's offering. It's just, again, squeeze. 80% of the day you're in a squeeze. You had the one sell-off in the afternoon, so it was somewhat similar in that once we broke here. Now let me pull this up here. Once we go up here, you can clearly, right? Divergence is not something to ignore. I get a new high here, but look, I don't get a new high in the edge right here. Right, so I can't. So here this is an aggressive move. Look how far I get beyond one standard deviation here of this 21 EMA in the center. That's where the edge really shows you the strength. Here I'm coming out of a squeeze from the open. It's a squeeze until 11:30. I get one little pop, but this is not the move, right? That's not the one you want. It's the retrace. Now it doesn't. You don't get much out of it. You don't get a lot. By the way, that's Madonna right there, first test, right? You had to hold that, right, to get. You didn't get a lot from it, but there it is, right? Again, every single day, there's an algo every day on both sides. We'll fade that. Don't take my word for it. Just go look at it yourself. We get a little kick here. Now, again, same thing. When I get up here, I'm still in a squeeze. The trade here. I mean, you're not going to make this do too well with one lots here, but there's 21 ticks. Right, so, and it's during a squeeze. I didn't trade it. The only decent trade I had yesterday was the sell-off, and it's set up in the same way what we just looked at. Here's the swing. We get on the other side. We come out of the squeeze, right? Now look what side is it? Where's the EMAs, right? We're on the red side here. What's the center line here? Where's the MACD line relative to the Bollinger Bands? What's the volume doing? This is the trade. Okay, where's my arrow? Right here. Now, I know, right? You don't need to comment. I understand we're doing this in hindsight. I'm trying to show you this so if you were trialing or demoing this, you knowing what to look for. So the next time you see that, oh, hey, that might be something I want to take advantage of. Now, what else is a contender here? Note here, we're bumping into the, we're literally ticking it here. We're coming back to the IB. Now, on a day where there's very little range, this is incredibly common. I mean, in fact, you'll see this 60-70% of the time. Once the IBs are established, we will grind, we call it riding the rail, right? We are just grinding that rail of that IB high. And that's why the IBs are so critical to the type of day we're going to have, because if we can't grind beyond the IB, as we did at the end of the day, likely you're just going to either come back into the middle, right, where there's not great opportunity, where you don't have edge, or you're going to drive all the way down and break the. Here's where we break the IB high at literally 3 minutes before the close. So the only decent trade, and there have not been many these last couple of days, the edge and this little combo here have kind of set you up for it pretty nicely. Now, what's the only other thing here that I could add into this to sweeten that a little bit? All right, so if I add the measured moves back in. Now, with that added here, even in this slop, right? And I don't, when we're like this, I'm not trading it. But look, just as a function of understanding the influence of the measured move indicator, which, you know, again, I talk about this very often. Reminder, this is not my discovery. I just took it, saw it, ran with it, applied to everything I've ever done since seeing it. This is David Halsey's discovery. He's the one who introduced the market to this. This is the algo that we can track. We can see its footprints. Here, now look, if you can see this. Here we go, we swing up, we retrace to the golden zone, and then the green line that you see right there, it's a little hard to see. That's the target to the algo right there. And what is it running into as it hits that target? Another golden zone. Where's that target? Right here. It bounces from there. Where does it go from here? To the next golden zone, which happened to be right at the Gann high low, right at the IB. Where's that target? Right here. Now, this is end of the day here. Likely, you know, maybe you're trading it here, but I don't like to be in that last few minutes here. Just it can get too crazy. But you've got this opportunity here, like you waited all day for that. Assuming, right? Well, let's go back to slop. Okay, I'll come back at the end of the day. Well, it was there, right? Much like today, same thing, right? You waited all day for it, and did the devil's edge give it to you? Let's go back over here. Look here, right? Once we're here, we don't even get in the river. Look at this here. Once we break here, we never get back into the river. That's telling you the market is very, very weak, right? If we can't get that little retrace kick, you got the retrace in the price action, but not in the indicator. That's the market screaming at you here, right? Very, very weak, right? And look where we go, right? Another measured move target. So let's see. There's 22. I'm trying to keep this to 20 minutes, but I'm not going to make it. I'm going to. Let's see. Hang on. Let me here 1 sec. I'll show you this and then I'll wrap it up. How about a 5 minute? For those of you who prefer something like a 5 minute to a tick chart. Oh, this here forgot I had these on here. Let's just look at the measured move. How many do you see here? How many do you need to see before you start paying attention to this? 1, 2, 3, all getting to their targets. Now here, you don't have a measured move here because it doesn't. That's not a 50% retracement or 618. That's the 5 minute. Right, so if you took it here, right, best case is you got out here. Okay, how about the 15 minute? All right, see how pervasive this is. Oh, hang on, let me get this. 15 minute. Every damn near, not every, this one's not. Golden zone 50. Golden zone, targets. Look at the target down to 50s and golden zones here, tapping the trend line. Nothing here, right? It's not every pivot. 50. Golden zone, bang. Oh, what have I got this clean? Hang on. MNQ traders. 15 minute MNQ. See a few measured moves. This is a massive cluster here. Golden, 50, golden, 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 golden. Keep going. Golden, golden, target, golden. Right. How many do you need to see? Golden. Now, keep in mind, for everyone that succeeds, there's one that fails, right? So context and understanding, where the odds are to give you that edge. Interesting here, right? How we've come back and filled in most of this fair value gap. We've got all of it with it less a tick or two in the MES. Not completely mitigated here, but as we come out of it, from a golden to a golden to a golden to a golden to targets. Maybe. Right? Maybe something you want to pay attention to. Just a suggestion. Okay, guys, just a reminder, we've got our sale going on for those of you. Oh, here, let me get this is from within our Discord, just posted the other day. We've got this little flash sale. Well, it's not so little. We've got a flash sale going on Friday. Everything in our catalog, our 77, 78 indicators now, will be on a 40% flash sale for one day only on Friday. Now, key note here, that's everything except for Algo Studio Pro and prepackaged bundles, right? Because they're already discounted, right? So we can't, those are previously discounted, right? So everything but ASP or bundles like the footprint auto trader and the footprint indicator, that's a bundle that's already discounted. So with that exception, but individual indicators, right? We rarely go that far, right? So for a Friday one-day flash sale, keep in mind that that's available. So for example, you might want to maybe demo or trial a few of these indicators we focused on this week, whether it be the toolbar, the Gann high low, Devil's Edge, some of the things we looked at earlier in the week. Those might be things you might consider a trial for a day or two. Remember, you get 7 days. And then take advantage of that sale pricing on Friday. Just a reminder, that's one day only, right? This coming Friday. Okay, guys. With that, I'll wrap it here. Hopefully, you found a little inspiration, a little help from that. Maybe some new ideas and maybe some new tools you might consider that would give you that edge we're all looking for. Okay, guys. Good trading to you.